Welcome back, guys. It's currently Sunday evening, 10 p.m., 1st of July 2021. Happy Independence Day to all the Americans, for sure. We're currently going to do the weekly recap for last week, so the week starting with the 28th of June and ending with the 2nd of July last week. Last week was the NFP week. So, as you know, we had NFP data on Friday, we had ADP figures on Wednesday, and not much, and the unemployment rate on Friday as well. Not much in between. So we're going to start with at the start of the week. As you can see, we were already ranging in another block prior to NFP and prior to big news about the state of the economy, US economy. We were ranging between the key levels 1795, 1764, and now in the last days we were ranging between 1789 and 1772.5, which has been a great support for price. So as you can see on the hourly time frame, we already have the bearish trend line that we are printing from much higher time frame, and looks like it's being respected. Of course, now we are in a order block, so even if the order block goes much wider on the sideways, the bearish trend line is just gets a different inclination, but doesn't mean that it's not valid anymore. So at the start of Monday, pre-London, what do we see? We saw, of course, the previous week push to 1789, sell off, and now little small pullback, and then a sell off to find support at 1772.5 again. Correction, and now we have some minor bullish candles. So let's go on the analysis that we made on 28th of June. So this is the ADP and NFP week. We show how far we are currently from the labor market condition that Fed wants to start talking about tapering, as we did as well in the backtesting sessions. We saw how in 2012 the unemployment rate was really important. Fed wanted an unemployment rate below 6.5 to start really talking about tapering and raising interest rates. Currently, we are like at 8.5, 8.1, 8.3, which is still high. So as you can see, we were looking at these big rejections at the 72.5 key levels, and we were expecting, of course, we were looking forward to see if this bearish trend was respected. Of course, we were looking to play safe sells, safe buys above 1789, 1781 key level. Of course, safe sell below 1772.5. So let's start with Monday. We're going on the 5-minute time frame, and we start to see how it plays out during the Monday. So we are seeing bearish trend line being respected. It's currently New York session already. We're going really fast, as you know. Even if it's a little further, we see that price is not able to break previous highs. It's printing lows. And what is doing now that we have finished Monday? What are we looking at that we are spotting now in this order block? Let's go in the following days. Tuesday, we are looking at order block that is shrinking, as you can see also here pretty clearly. Now the trend line, of course, has to be moved. Let's go on the okay, let's do this, and we here Okay, we put it around here. That's it. This is the new trend line after Monday. As you can see, let me update it. Okay, now we have the old one. Oh Jesus, this one. Okay, okay. As you can see, it's being respected. Let me fix it a little bit. There we go. So we are seeing, what are we looking? 1789 key level, 1772, multiple rejections even during Monday. What are we looking at? A wedge that is being created between the trend line and the 1772.5 key level. So we are expecting a squeeze for Tuesday, which is probably going to be in trend. So on the on the on the bearish side, so down to 1764, which is the bottom of the order block, as you remember, is the bottom of the order block, and possibly even further. So let's see how it goes. So of course, as you can see, we are looking to see the reaction at this squeeze. Of course, safe sells below 1772.5. If we see a reaction, then we are going to look for rejections. Remember that 1764 is also the bottom of the other blocks on the left when the trend was bullish. So let's go really fast through Tuesday. As you can see, the bearish trend is being respected. The wedge is being respected. Rejection at the 1772.5 key level. We see a first break below 1772.5 during London session. A retest. Failure now to chill. Okay, failure to break above 72.5. This might be some quick scalp for 80 pips. We got a huge rejection at the bottom of the order block, remember 1764, but we failed to break above 1772.5 again. So now what do we see? We see some liquidity grab, some pullback, and then melting below 1764 and going to touch 1751. So as you can see, the wedge that we were spotting here managed to get a squeeze on the bearish side, breaking below the order block. So now what we can expect, of course, after such a big break, we got our action of melting. We are expecting to see at least a retest of 1764 if price is not able to break below 1751 key level. So exactly, we see some rejection. We see a retest of in the bottom of the order block, not being able to have some strong closures above, and now we end the day, as you can see, retesting but failing to break above. You see, we have no strong intraday candles closing above 1764. So now we're going to so we see our analysis played out. Sell scalps below 1772.5, even to 1751, worked on the dot. So we go on Wednesday 30th of June. We saw the break, the retest. We were looking for some reaction at the previous lows. So we saw that on the hourly time frame, a resistance to the bearish trend line or support for gold was created. So we were looking for a reaction at this price level, which was 1755, 1756 ish. If price was not able to break below with strong closure, strong bearish, strong sellers, with showing sellers in control, we were looking for high risk, high reward counter trend buys. Of course, safer buys above 1759 key level, or even further with a break and retest of the lows of the order block. So let's see how it plays out. This was, of course, the ADP figures day. So we see a retest, a failure to break above 1764, the key level, and the low of the block. So now we see during London and New York session price retesting this level, the previous lows. Let's see if it manages to break. Looks like not. Let's see. We also have the ADP figures not creating much volume volatility, and now we see that price made a sort of double bottom on hourly time frame. Tack, tack. So we see how the reaction at 1764 key level. We see a break, a retest, and then price creates higher lows, higher highs, and possibly higher lows. You see, retesting this level. So now we got exactly what we were expecting. Did touch again 1772.5. We see that our analysis played out on the dot, exactly on the dot. Of course, on the 5 minutes it was not something easy to enter, but when you see that on the hourly time frame price is not able to break below multiple times, you can then, with the volume, with the volatility, see that, okay, now I'm expecting price to do the double bottom, do what I was expecting, and to touch again the key level we were expecting on the dot. So now we go. Okay. So now we go on the Thursday, the day prior to NFP. ADP figures showed a decrease from the previous report, but more than consensus. So being less than previous gave some juice to gold. Today we have some PMI jobless claims, but tomorrow we have NFP. So we were playing between key levels. So let's see if this bullish trend is maintained on the 5 minute, on the hourly time frame. Let's see how it plays out Thursday. Okay. We are creating higher highs, higher lows, higher highs, higher lows. So we are clearly seeing a shift in this market structure, and we see the trend line is being respected. Of course, not exactly on the dot. We see now another shift in the market structure because we see tapping of 1781 key level, which of course was a strong resistance and a sell-off. So what we were expecting for the day, high risk, high reward, sells at rejection of 1781. So we were expecting this move, pullback to 1772.5 to, yes, Okay, retest of the order block during night. We were expecting 1772.5 break and retest, go to 1781, and look for rejection. And we saw a huge rejection, as we were expecting. High risk, high reward here, SARS, working already for like 120 pips. Price creates a double bottom, and then price continues to go bullish again. We go now to the NFP day. This one now doesn't mean anything. We can put it here, but doesn't mean anything. So we're going to the 2nd of June. I was either expecting a double bottom and with good NFP figures and good unemployment, create a double bottom and then continue down and break below 1764 and break below the previous lows, or safe buys above 1789. Let's see how it plays out. Okay, so we had NFP and unemployment rate 5.6, not 8.1 was in the backtesting sessions. So let's start. Friday, 2nd of July. So we see respected the bullish trend. Let's see the reaction at 1781. Of course, we don't expect a lot of movement or impulsive movements prior to the data. So we see some ranging and order block creating, a sort of retest of 1781 key level, 1772.5 key level, and then break and retest of 1781 to go and revisit 1789 key level. Failure to break it. Now we see we have the NFP and the unemployment change. So we had really good NFP data, but more unemployment rate, much higher. So more unemployed people, 5.9, which is putting off the investors, saying, okay, if the unemployment is so high, the Fed is not going to start tapering anytime soon. We saw some whipsaw, of course, nice 100 pips of liquidity grab, investors playing the NFP good figures, but the overall trend was bullish for gold, since, as we said, tapering interest rates after this report are further away, not closer. So now we see crazy action, reaction at 1795. Of course, catching these buys above 1789 was not easy. We see some whipsaw, reaction at 1781 key level again, failure to break, and then a much cleaner bullish trend for gold, 100 pips from 1781, failure to break it. Okay, and that's it. This is it for the week. So we saw okay, we can put it this way. So we expected the wedge creating between 72.5 and the trend line, respected the squeeze happening, creating new lows at 1750-ish, retest of the low of the order block, which was 1764, failure to make new lows, as you can see, a double bottom created, and then bad NFP ADP figures than the previous one, and bullish trend creating, bullish trend, NFP sort of good figures from the NFP but bad figures for the unemployment rate, whipsawing, and gave then a nice bullish trend to gold. So this is it for the week. I hope you enjoyed. See you next time.